Hello traders, welcome to today's Daily Edge. Um, uh, what we're going to do is, we're going to just have a quick look at what's going on right now in the markets. Just let me share um, let me just share the link with everybody so everybody can join. Just a quick second here. And well, today's a crazy. Well, today's non-farm payrolls, non-farm payrolls Friday, and right here what we have is on the left we have my normal charts, and on the right we have my news terminal. Okay, and we are about 14 minutes away from non-farm payrolls, and let's start by looking at the numbers. The first thing is that we are expected, or the NFPs are expected to come out at 163,000 jobs added in August. Excuse me. I'm sorry about that. Versus 164,000 jobs added in July, right? Then we have the average hourly earnings month over month. Those are expected to maintain at 0.3%, and the unemployment rate is also expected to maintain at 3.7%. So what we're going to be looking at is a possible bullish move for the US dollar. Okay, so what I'm going to be doing right now, let me just show you my US dollar index chart. Okay, and I'm going to explain to you all these, everything that I have on my chart right now in just a second. Okay, um, just give me 1 minute so I can email everybody. Just a second. Okay. Uh, okay, so we are about 12 minutes away from non-farm payrolls, and it's pretty normal that before non-farm payrolls, the market is just bouncing around and there's no clear movement or clear direction. Okay, I just sent everybody an email because I would love for everybody to join us. All right, so everybody has been invited to today's Daily Edge. And let's start by looking at the US dollar index, okay? And what we have here basically is a very bullish structure, okay? Now everybody's going to, I know that everybody wants to know what these ABCDs are. So basically what I'm looking at, this is just technical, guys, okay? This is pure technicals on the US dollar index. And the interesting thing about that is that we have two big ABCD patterns. Okay, we have the first one starting here from A to B to C, and then the D target is right here. Okay, this is the target of the white ABCD at the 138.2 retracement of the B to C move. Okay, right here. This is the first target, or the targets of the white or the big ABCD. But we also have a bullish target at around the 99.80 for the shorter term pattern. This one right here, A to B to C and then to D. Okay, so very interesting because we do have two bullish patterns that are not completed just yet, and that their patterns is are well that their targets confluence both with the 99.80%, the 99.80. Of course, that this is just these are just technical. I'm sorry, these are just technical targets to the upside, and depending on non-farm payrolls, we're going to maybe achieve these targets or completely break with this bullish structure. Again, if we have a huge miss on non-farm payrolls, guys, the possibility for us to finally break below this thick zone is very possible. Okay, but everything's pointing out at a bullish non-farm payrolls in about 8 minutes. So we are going to be having a good. We're going to have the um, uh, the US dollar index chart right here, and gold. The assets that are really interesting, or that really matter to us, are the two in the middle, right? The US dollar index and of course gold. Now let's have a look at gold and where it's trading right now. Again, the interesting thing about yesterday's bearish move is actually, guys. Yes, this is a break of long-term bullish structure. Okay, let me just zoom out on this chart. The way that I drew this bullish structure is just drawing a um, a trend line on the highs, and then copied and pasting the trend line and pasting it at the bottom of the move. Basically, this gives us a bullish structure. But if you just don't look at this um, structure and just look at levels, the way that I'm looking, or the way that I want to trade gold, is just wait for that 1495 to 1490 retest right here for a good buy. Well, for a good buy, for a great risk to reward ratio on a buy opportunity. Now, if these non-farm payrolls beat expectations, this means that the US dollar is going to appreciate. Okay, buyers are going to start to, bullish volume is going to come into the market, and the US dollar is going to go up. This means that immediately we're going to have a bearish reaction on gold. And I do think that if we have a beat on expectations on non-farm payrolls, it's very plausible that because of the level that we are trading right now, that gold will break with this big level of support. And this is an important one, guys, because in my eyes, if gold breaks with the 1494 to 1495 to 85 level, we are going to have to start looking for short opportunities in the short term, okay, in this asset, or in this in this market.
Again, it's very plausible that if non-farm payrolls beat expectations, that gold will drop too. But here, um, we're going to have, or sellers are going to have well, a lot of problems breaking below, and buyers are going to jump in. So what we're going to be doing is because of the setup that might be happening in gold, we are going to be um just simply looking at the reaction on of the 1495 to 1490 level in gold. Again, of course, that with non-farm payrolls, you have to be looking at the dollar average versus every major. But I'm sorry about that. But if you look at the euro versus the USD, again, if NFP beats expectations, that means that the dollar is going to go up, and the euro versus the US dollar is going to go down. Again, with where the euro versus the USD is trading at, I really don't need non-farm payroll bid to know or to look for a short opportunity below a break, or on a break below this low at around the 110 14 level, which will give us a great risk to reward ratio, right? It will give us a possible target of around 86 pip for a 40 pip stop loss, which is a 1 to 2 risk to reward ratio. And the reason that I didn't put on a pending order is because we have non-farm payrolls, okay? And you never know if, well, you never know if, numbers or expectations are going to turn out to be true, okay? So, and reacting to non-farm payrolls is quite difficult, in the sense that, for example, let's say that I put on a pending order to sell the euro versus the USD right before non-farm payrolls, okay? And let's say that that the non-farm payrolls, or that numbers don't beat expectations. That would mean that the dollar would go down, and that would mean that, uh, or that would be bullish for the euro USD. But because of where prices on the euro USD is trading at, it's almost likely that I will get filled on my position and then stopped out on my position, okay, right here. So that's the reason that we don't put on pending orders before NFPs. So right now we're 2 minutes away from non-farm payrolls. Let's have some patience, and let's wait for the numbers, okay? We do have some. We do have some great opportunities, and one of the opportunities that I was looking at is this very nice buy on the U.S. dollar, Canadian dollar. But again, I didn't take it because of MVP Friday. But it looked very, very nice for a nice risk to reward ratio. Okay, for a nice win, um, a possible win of around 120 pips for a tiny risk of around 35 pips. But again, because it's MVP Friday, and because we also have unemployment numbers coming out of Canada, that I'm not going to be putting on a trade based on technicals. We are less than a minute away from non-farm payrolls, guys. So the numbers should appear on the right side of my screen. Here on my news terminal, they're going to be blinking red. Again, let's go through the numbers again. 163,000 jobs added is the forecast versus 164,000 in July. So anything above 164,000 is going to be bullish. All right, so 130,000 Jobs added, so non-farm payrolls do not beat expectations. This is very bearish for the US dollar. Just look at it. Well, the unemployment rate stays as stays at 3.7%. But the actual numbers on non-farm payrolls, 130,000 jobs added in August versus 164,000 jobs added in July. U.S. private non-farm payrolls, 96K versus 148K previous. So this is very bearish for the U.S. dollar. Let's have a look at the entire numbers, okay? And U.S. manufacturing payrolls in August actual 3K versus 16K previous. So overall, bad job numbers out of the U.S. I don't see the numbers of or the actual employment or numbers on Canada, and there's not a big reaction actually. If we go to the hourly, yeah, I mean just look at the reaction on the U.S. dollar index, very bearish. We go to the south side, and Canada unemployment change. It's this is NFPs from Canada, right? 81,100 jobs added versus minus 24.2K on July. Okay, so Canada beats expectations, which means that this is going to be bearish for the US dollar, Canadian dollar. So this is NFPs and a very mild reaction on the markets. With the volume that we have seen so far, I would have expected a much bigger reaction from overall, uh, the one that really uh, that really is rallying is silver, and again we missed on that long because because of non-farm payrolls, but this was a very clear buy in silver. Um, and this is the only asset that I'm actually looking that it's really moving. Um, because I mean, just look at gold. Yeah, a mild reaction to the north side, but overall very mild reaction on over the board. But I mean, let's have a look and let's wait for clear movements, okay, or for a clear move or some directionality in the uh, or some volume coming in on the market, because I mean I think that we are 1 hour away um, from the New York Open. Let me see. Yes, we are 1 hour away from the New York Open, and the New York Open should bring more volume into the market. So this would mean that if you are going to be trading, after this news release, you should be looking is buys across the border on the on gold, on the euro versus the US dollar, on the GBP versus the USD. Even though the GBP versus the USD was trading at a very extreme levels, I don't know if you guys noticed that, but let's have a look. The GBP versus the USD is trading at some very extreme levels, and there is actually no key level that we are bouncing from right now. But if you look at the pound versus the yen, for example, the pound versus the yen is trading at some very extreme levels, and some very important bullish targets. So what we're expecting is just a retrace back to the 130.40 level for a buy opportunity right here on the pound versus the yen. Let's have a look at what. Let's have a look across the border, or at what opportunities can we profit from. Okay. Again, silver, very strong move to the to a very strong bullish move in silver. The US dollar versus the Mexican peso breaks with this level of support. I mean, this was a very clear buy. Um, and we didn't take that buy, but it was a very clear buy opportunity right here. Again, because of NFPs, um, right now we are moving south. This is all driven by the US dollar. This move is all driven by the US dollar. Bitcoin, I mean, Bitcoin doesn't have a reaction on it should have a reaction because it's Bitcoin versus the USD, right? But if you look closely, we are still on this buy position in this cryptocurrency, and we did add right here. And of course, if you are not a premium subscriber, you can get these exact trade levels, but we are actually long from this level. We took half of our position here, and then we added at this retest right here. So right now we have two positions in Bitcoin going on, and they are clearly winners, and we are expecting and we are going to be taking profits around these levels in this cryptocurrency. If you are not a premium member, well, I urge you uh, to take us for a spin drive. It's only $25 for the first month, and I'm leaving you the link on the bottom of this video for you to take advantage of this promotion. Okay, let's have a look at the US dollar versus the Japanese yen. Um, let's go to the 4-hour chart because, if you were not with us yesterday, let me show you again what has happened on the USD yen. A clean break of this very important level of resistance, and right now, because of NFPs, we had a retest of that 106.70 level, and now we are moving back up. um, Again, there was no clear setup for me, but let's have a look at some targets to the upside, because this is the direction we are moving um, right now on the US dollars to the Japanese yen. First one right here, we already tested it, and if we break with that level, the one that I will be looking at is the 107.80. Around the 107.80 seems like a good second target for this move. Now let's see. Uh, Again, the US dollar currency index is trading down, um, and we are less than an hour away from the New York Open, and when the New York Stock Exchange opened, or the New York session opens, this is going to bring a lot of volume that it's definitely going to be pushing the US dollar down. Now, let's have a look at some equities, shall we? Why don't we look at the E-mini S&P 500? Okay, this is the E-mini S&P 500 futures contract. There's no clear, this is the 4-hour chart. Why don't we go to the hourly? No clear reaction on the E-mini S&P 500 from non-farm payrolls. Okay, this is where we're trading at right now. No clear reaction. Let's have a look at the Dow. It should be the same. But again, the US or the US Open is going to bring a lot of volume in. The only asset that really moved from these NFPs was silver. But again, because of the forecast that we had, or the numbers that, or the numbers forecasted that we had um, um, on NFPs, we didn't expect such a bad non-farm payrolls number, which means that if we expected a beat or a good NFP numbers, that would be bullish for the US dollar, which in its case would be bearish for silver. So that's the reason that we didn't take that long. But or the, yeah, the reason that we didn't take that long position. But again, the US dollar is completely moving down. Here you can see on my news terminal, silver turns positive, last up at 0.3% at $18.69 per ounce. Yeah, so basically this is FEPs, guys. You can see that the euro versus the USD is now moving up. Let's have a quick look, and let's go down to the 50-minute chart. We don't trade the 50-minute chart, but you can see that we did have a clear bullish reaction on the euro versus the US dollar because of these bad non-farm payrolls that are bearish for the USD. When we have bearish pressure on the US dollar, that turns out to be bullish for the euro versus the USD, for gold, for the GBP versus the USD, etc. So yeah, I mean, right now this is where we are, right, or where this is where we're trading. Again, very mild reaction to these NFP, which I didn't consider possible because of the high volume that we've been having all week long, you know. But again, let's see what the New York Open brings. And this has been on from Payrolls Friday, guys. I'm going to be doing this every single Friday, every single big news release. That means that whenever we have a big news data coming out, I'm going to be I'm going to be streaming live, and I'm doing this every single day at around 4 a.m. my time, which is noon Central Eastern European time, or Central Eastern Summer European time, CST, guys. And if you want to get notified every time that I go live, just subscribe to this channel and hit the notification bell. And if you want some freebies from my Daily Edge group, I've left you a link at the bottom of this video so you can join my mailing list. So have a great weekend, and I will see you guys on Monday. And remember, trade carefully, manage your risk correctly, and if you're going to be looking for opportunities, again, just look to buy the euro versus the US dollar, buy gold, uh, and again, we already missed that moving in the euro versus the USD. This is the 50-minute chart, guys, and it's very plausible that the Euro Open is going to bring price on the euro versus the USD down, so big money can secure a better risk to reward scenario, or a very better risk to reward scenario. So if we have a small pullback to around the 110.30, 110.35 level, this is where I will be a buyer, and this is where I'm going to be looking to buy. So for Tradimo, this has been Orlando, and I'll see you guys on Monday. Goodbye.